Hello and welcome to Building Africa. I'm Deborah Julie. Now, more and more roads, bridges, dams and telecom networks are being built, and this was launched about 6 years ago, and it didn't manage to excite investors. But with the commodities boom and the increase of infrastructure projects on the continent, the Eaif says it's optimistic that more players will get involved in the fund. Well, let's get some more insight on the fund as we cross our London correspondent, Karina Kamel.
Hi there, Ntebo. In early 2002, the governments of the UK, Switzerland, Sweden and the Netherlands launched a fund that would cash in on the growing number of infrastructure projects on the African continent. Now, private companies in 45 sub-Saharan countries have access to funding either in dollars or euros. But it's not just private companies that can look to the fund for loans. Soon-to-be privatized companies also have the opportunity to work with the Eaif in launching greenfield projects and upgrading and expanding their existing facilities. Orly Arab is a director at Frontier Markets Fund Managers, one of the advisors to the Eaif fund. Orly, thank you so much for being with us on CNBC Africa. Now let's talk about the commitment on the part of African governments and African countries to really invest heavily in infrastructure over the past few years. What would you say in that context are the biggest challenges that African countries are facing with respect to infrastructure?
From our experience, the biggest challenge is to have professional employees of the government to support these projects. They have a lot of projects going on. They have a number of people who have the skills, but they don't have sufficient people to deploy for many projects. So this is caused delays, and we have a problem sometimes to access the government officials.
Now, this fund was established in 2002. What was the thinking back then? Where did the idea come from?
The idea came from UK government, DFID. They wanted to create infrastructure projects in Africa. There is a market failure for commercial banks to come into Africa, especially in 2002. So this is why they set up the fund, to provide long-term financing for infrastructure projects in Africa.
And since 2002, how would you rate the quality of investments or the quantity of investments, and what would you say, in your opinion, are the most significant investments thus far?
Okay, I think we consider the growth curve have been slow in the first 3 years, and then so to give you a total amount of projects we've done so far is 13 projects, but to put things in proportion, last year we did 6 projects. So you can see that the growth has been quite slow, but last year was a peak year. This year we're looking at 8 projects. If you want to look at amounts, we have so far financed $320 million projects in the past 5 years, and this year only we're looking at 200 million additional projects.
Now, I'm glad you mentioned this year. I was going to ask you, in fact, about the global slowdown we're possibly facing in the international capital markets. How does it affect a fund like yours that is drawing on capital markets to raise funds? What's your outlook for 2008?
Okay, I think if we will look at Africa as a continent, there is no knock-on effect from what's happening in the OECD markets. If you're looking at Eaif, given we have 4 European governments as shareholders and our very good track record in the past 6 years, we are in the process of raising finance. We find it challenging, but I think the biggest challenge is to keep our cost of funding. We don't have a problem to get the funds, it's a problem to get it in the right price.
Now, China obviously is investing very aggressively in infrastructure in Africa over the past few years now. What kind of opportunities and challenges does that face? Does it pose for you?
Well, I think it posed for us a challenge to compete with other finance providers who has relationship with Chinese developers. They are very aggressive. I think the challenge is also for sponsors to compete with the Chinese, because they come in very strongly to Africa, highly developed, but in much more competitive pricing.
Now, I know that one of the intentions of the fund, or one of the objectives of the fund, is to work with the host governments, to work with the private sector in African countries, as well as non-governmental organizations in Africa. Now, what are you doing in order to unlock some of the local capital?
Okay, what we do to unlock in the local capital, our 4 shareholders set up a new fund called Garanco, which does credit enhancement for local currencies in emerging markets, which Africa is one of them. And then we work together with the local finance providers to do a partial credit risk guarantees in order to facilitate local currency, and that mitigates the project risks.
Now, I understand also that in terms of when you're providing funding for local counterparts, the fund is provided without the need for political risk cover. How do you mitigate other risks given that that's not covered?
Okay, the way we mitigate this risk, we have a credit committee which assesses for each project the political risk, and then we take a decision whether we want to invest in this project or not. Given our governments are behind us, we are using our leverage as a fund which has connection into the European governments, and this is one of the reasons why we don't need a political risk insurance.
And in terms of investor outlook, generally speaking, how would you say investor perceptions have changed with regards to Africa since the fund began and today?
I think investor looks at Africa today with much more interest, and I'll give you an example. The first project we have funded was called MSI Cellular. Today it's called Celtel. When we were financing this project, we were lenders of last resort. No one wanted to finance a mobile operator in Africa. They said, who will use these phones? So we financed them. Today, of course, it's one of the biggest success stories in Africa, and that gives some example on what happened in the past 5 years.
And can you give us an idea of some of the funding structures? Take, for example, one of your largest investments. Give us an idea of what the structure of the loan is and how the project actually took place.
Okay, the fund allows us to invest in any type of debt. So it can be senior debt, subordinate debt, mezzanine debt. Most of the project will have straight senior debt, 15 years. In today's market, probably the margin will move between 375 basis points to 425 basis points. When we do a mezzanine type of debt, where it's much closer to an equity investment, we look at a return on between 15% to 18%. So, for example, the first deal we've done, this MSI Cellular, we had these two instruments, and we had a nice return on that one.
Excellent. Well, thank you so much for coming and talking to us. My guest today was Orly Arab, a director at Frontier Markets Fund Managers, one of the advisors to the EAIF Fund. That is it from us here in London. It's back to you in Joburg.
After the break, we were speaking to Eaif, CEO of Ethiopian Airlines. Now, the EAIF has committed $36 million to the airline, with the first payment scheduled to take place in October this year. Stay with us. Welcome back to Building Africa. Now, the EAIF has committed $36 million to Ethiopian Airlines, with the first payment scheduled to take place in October this year. Now, with soaring fuel prices, it's tough times for the airline business in Africa. And in fact, most African airlines are too small or financially weak to vie effectively with European and Middle Eastern carriers. So the investment is certainly a vote of confidence for the Ethiopian Airlines. On the line, we're joined by Eaif, who's the CEO of the airline. How are you, sir, this afternoon?
Very good.